Hello everyone. This is the gold price update for February 3, 2026. The update time is 9 p.m. U.S. Eastern Time. This is a critical moment as the U.S. market is nearing the end of the trading session. Gold prices at this hour clearly reflect global investor sentiment. First, let's take a look at gold prices in the United States. Spot gold is currently trading at very high levels. Prices are hovering around the 4.9x US dollars per ounce range. This is an extremely high level compared to historical standards. The U.S. market is showing a clear return of capital into gold. The main driver is ongoing global financial uncertainty. Inflation remains persistent and not fully under control. High interest rates continue to pressure economic growth. Stock markets have been extremely volatile in recent sessions. Investors are once again turning to safe haven assets, and gold remains one of the top choices. During today's session, gold experienced minor pullbacks. However, strong buying quickly stepped in. This shows that demand for gold remains very strong, especially from institutions and large funds. The U.S. futures market reflects the same behavior. Gold futures are holding firmly above key price levels. This signals positive expectations in the medium term. On the daily chart, gold remains in a clear uptrend. Recent pullbacks appear to be technical in nature. They have not changed the overall market structure. Now let's zoom out to the global gold market. International gold prices are closely aligned with U.S. prices. The U.S. continues to be the main driver of global gold trends. Movements in New York impact markets worldwide, and Vietnam is no exception. When the U.S. market rises, domestic prices tend to react quickly. In Vietnam, SJC gold prices surged sharply today. Selling prices are now at historically high levels. The gap between domestic and global prices still exists. This reflects local supply, demand, and policy factors. Gold rings and jewelry prices have also moved higher. However, their gains are usually smaller than SJC gold. This leads many investors to compare different types of gold. Long-term investors focus more on wealth preservation. They are less affected by short-term volatility. Short-term traders, on the other hand, face much higher risk. The current gold market is not for weak emotions. Daily price swings are extremely large. A single headline can move prices dramatically. Risk management is more important than ever. Back to the U.S. market. The U.S. dollar shows signs of weakness. When the dollar weakens, gold typically benefits. This inverse relationship has existed for decades. Meanwhile, geopolitical tensions remain unresolved. This continues to support gold prices. Central banks are quietly adding more gold reserves. This has been a long-term global trend. They aim to reduce reliance on fiat currencies. Gold is viewed as a neutral and durable asset. This creates a strong price foundation for the market. In the short term, gold may remain volatile, but the long-term trend still looks supported. The key question is your investment approach. Are you a long-term holder or a short-term trader? These mindsets are completely different. If you are a long-term holder, short-term moves matter less. What matters is purchasing power over many years. If you are trading, discipline is everything. The gold market does not reward emotional decisions, especially during periods of extreme volatility. Looking back at today's U.S. session, gold showed strong price resilience. Every dip was met with aggressive buying. This reflects strong market confidence in gold during uncertain times. Gold is not making new price levels by accident. This is the result of multiple forces combined. Economic pressure, geopolitical risk, and monetary policy. All of them currently favor gold. That said, no asset moves up forever. Preparing mentally for corrections is essential. This helps prevent panic during market pullbacks. Now comes the most important question: where are you in the gold cycle? Are you accumulating or waiting on the sidelines? Everyone will have a different strategy, but understanding risk is a common requirement. Never invest out of fear of missing out. The market always rewards patience. Today's gold price is a perfect example. It reflects deep concerns within the financial system and the global need to preserve value. When money loses purchasing power, gold gains importance. This pattern has repeated for hundreds of years, and it still holds true today. Looking ahead, the U.S. market will remain the focal point. All eyes are on upcoming policy decisions. Even small changes can impact gold prices. That is why tracking gold during U.S. hours matters, especially for investors focused on global trends. This update is meant to provide perspective. It is not investment advice. It is about understanding what the market is signaling and understanding the psychology behind the numbers. That is what truly matters. Thank you for watching today's gold market update. If you invest in gold, share your perspective. Do you think gold will continue higher from here? Are you holding, buying, or staying cautious? Leave your thoughts in the comments below. Your insight helps build a stronger community. Don't forget to subscribe for future updates. Gold volatility is far from over, and we will track every step together. See you in the next update.